All right, let's get right into it. Today, we are pulling back the curtain on a pretty brilliant and kind of scary masterclass in financial manipulation that went down in plain sight on Reddit. It's a story about a promise that was just too good to be true, a hidden agenda, and most importantly, how you can avoid becoming someone else's payday. So, it all kicked off with just one post. I mean, just imagine you're scrolling through Reddit and this headline pops up, a 40% jump in 10 days. And it's not just a random claim. It's a full-on breakdown with what look like pro-level charts and a really convincing story. For thousands of everyday investors, this felt like the signal, the one they'd been waiting for. And the reaction? Well, it was instant. And this timeline? Wow. It basically tells you the whole story in just a few seconds. Day 1, the post just explodes. By day 3, the price is up a little bit, which seems to prove the theory right, and that just sucks in even more people who are terrified of missing out. But then, look at day 8. The whole thing's fizzling out. By the time that 10-day promise is supposed to pay off, the price is actually lower than where it started. And the original poster? Gone. Account deleted, just vanished into thin air. A total textbook boom and bust. So the big question is, how did they do it, right? How does a single post get so many smart people to risk their money on a claim that sounds so wild? Let's dissect this thing. Let's look at the anatomy of the hype. Okay, so this slide really gets to the heart of it, the difference between what you saw and what they wanted. On the left, you've got this sophisticated analysis, right? Charts, data, a great story. It makes you feel like you're being let in on a secret. But the reality, on the right, is that the goal of every single chart, every single word, was just brutally simple: get you to buy silver. That's it. It wasn't about educating you, it was an advertisement disguised as insight. The whole thing was built on these 3 really powerful pillars. First, you had the technicals. They threw around a bunch of jargon and charts talking about a textbook cup and handle pattern, which, sounds super official and predicts a big price jump. Second, the fundamentals. They used real-world trends like how silver is used in solar panels and electric cars to make the story feel solid. And the final piece, the masterpiece really, was the conspiracy. They created this whole us versus them narrative, the little guy fighting back against the big, evil banks. It's an absolutely irresistible mix of logic, emotion, and a sense of purpose. But that whole story, all 3 pillars, it was all just a big smokescreen. It was designed to hide the real trade that was actually going on behind the scenes. See, this was never a prediction. It was an ad. And what we're talking about has a name you've probably heard before: a pump and dump. It's one of the oldest tricks in the book. The pump is the hype campaign, that Reddit post, all the buzz on social media, designed to artificially inflate the price. The dump is the part where the people who started the rumor sell all their shares at that new, higher price to the very people they just tricked into buying. So here's the playbook, broken down into 4 easy steps. Step 1 is accumulate. The scammers quietly buy up a ton of silver when the price is low, way before anyone is talking about it. Step 2, hype. They create and unleash their weapon, our viral Reddit post. Step 3, attract. All the retail investors, driven by that fear of missing out, pile in, which creates the price spike they need. And finally, step 4, distribute. The original group sells all their silver to that new wave of buyers, cashing out for a massive profit and leaving everyone else holding the bag. And look, you have to understand, even though this feels very modern, the scam itself is 100 years old. In the Roaring 20s, it was fake stock tips in newspapers. In the 90s, it was those spam emails about worthless penny stocks. In the 2010s, it was influencers on Twitter. Today, it's these slick, sophisticated, data-heavy posts on Reddit. The technology changes, but the scam stays the same. So, if this is such an old trick, why does it keep working? Why do we keep falling for it? Well, the answer isn't in the markets. It's inside our own heads. These schemes are literally designed to exploit the bugs in our human brains. I mean, seriously, think about it for a second. We all know that get-rich-quick schemes are a giant red flag. So why, when we're in the moment, does a post like this feel different? Why does it feel so believable? It's because these scammers are masters of psychology. They hit all of our weak spots. They start by triggering your FOMO, that fear of missing out. What if this is the one? What if everyone else gets rich and I don't? Then they tap into your confirmation bias. If you already kind of thought silver was a good deal, this post feels like gospel. Then you get the social proof. You see thousands of upvotes, tons of excited comments, and you think, well, it must be a good idea. All of this is wrapped in what's called authority bias. The fancy charts and technical terms make them sound like experts. And of course, driving it all is good old-fashioned greed. It's a powerful cocktail that can make even the smartest people turn off their brains. Okay, so now that we know how they do it, how do you protect yourself? How do you build up what we'll call an investor's shield to defend against this kind of attack? First, let's just be real about what's at stake. Studies have shown that the average retail trader, that's you and me, underperforms the market by about 6% every single year. A year. And why is that? It's because they're chasing hype, trading on emotion, doing exactly what these pump and dumpers want them to do. So avoiding these scams isn't just about dodging one bad trade. It's about changing a pattern that costs people real money over time. So this is your shield. 5 simple questions to ask before you even think about investing. Number 1, why are they telling me? Seriously, if a tip is that good, why would they share it with strangers online? 2, who are they? Is this a brand new account or someone with a long, credible history? 3, is it true? Can you actually verify these claims somewhere else with your own research? 4, what's their incentive? You have to assume they benefit if you buy. And number 5, the most important one, what's my risk? If this goes completely wrong, what's the damage? Let's just end with the one question that cuts through all the noise, all the hype. If somebody, anybody, truly knew 100% for sure that an asset was going to jump 40% in 10 days, would they be telling you about it on Reddit?
The answer is so simple. They're not sharing an opportunity.
They're creating their exit. Your decision to buy is their opportunity to sell. Your fear of missing out is their profit. If you can just remember that, you'll never be someone else's exit strategy again.